Welcome back. As promised, VST Tillers Tractors is the stock on our radar. It's been buzzing in trade. In the past 6 months, the stock is up 50%. And if you just map, the past 5 years, the stock is up almost 200%. So it's given great returns to shareholders. In the last 6 months, the company has entered into a master service agreement with a US-based company, Solitrack. In terms of guidance, the company has talked about maintaining their margin guidance of 11 to 13% and good double-digit growth in their businesses as well, both tractors as well as tillers. Antony Cherukara, who is the CEO at VST Tillers, joins us now to talk more about that. Mr. Cherukara, good morning, and as always, great speaking with you on the channel. I wanted to start by asking you, how are the demand trends currently? How has it been in this festive season so far? And are you on track to see that 10 to 15% growth that you guided for in the tractor segment by FY24? And what are the initial signs that you're getting for FY25 as well?
Yeah, good morning, and nice to be back here again talking to all of you. The tractor trend definitely has got hit, as you can see from the industry figures, because of the deficient rainfall in certain parts of the country. That has affected us as well. From the growth projection of 10 to 15%, we are looking at lower single-digit growth or flattish growth for this year for tractors. However, for the power tillers, the growth projected of 15 to 20% will continue. As you know, the industry is dependent on monsoon, and next year's trend would be looked at in terms of how the monsoon will behave. And we are hopeful that it will be normal.
Okay, that's interesting. So you are lowering your guidance for the full year. Earlier, your guidance was a 10 to 15% growth. Now you're looking at a low single-digit growth in the tractor segment. Would that also put pressure on your operational performance? Because, you have your margin guidance as well. You've maintained it at about 11 to 13%. Would you be lowering that too?
No, we will not be lowering the margin guidance. In fact, H1 we were above guidance figures, and we expect to close very much within the guidance that has been given. We also don't expect revenue growth to be impacted, because multiple businesses, verticals that we have set up over the last 3 years will help us to guide through the growth that we set for ourselves for this year as well. But the tractor business, I said, will definitely get affected.
All right. Hi, Anthony. Good morning. Thanks so much for joining in. Well, your margins actually have been the bright spot out there, because in the first half of the year, they've done quite well. When we last spoke, you spoke about 11 to 13%, if I'm not mistaken. So now should we be working with 13 to 14%, given that in the first half of the year, you've done so well?
We should be around the 13% mark.
13%. Got it.
Yeah.
Okay. All right. And also just want to confirm a couple of other numbers. I'm looking at your tiller sales for last year was around 38,500 approximately. And tractors were in the vicinity of around 6,900 units. So for this year, you're saying that on tillers, you should be in that vicinity of around 42,000, 43,000 units. And on tractors, it should be around 7,000 units. Are we getting those numbers correct?
You're right.
Got it. Okay, so that clears out a couple of numbers. Also, Anthony, the stock price has been very excited. As you said, tractors, really the growth hasn't come about. And the big focal point that the street is looking at is, you all have guided in the next 2 to 3 years, revenues will be around 3,000 crores. Are you sticking by that guidance? And tell us which year, because we get a little bit confused whether it's FY26, is it FY27, by when is it, and is it going to be all organic?
Yeah, so what I've said before is FY26 3,000 crores, and we are sticking to that. The growth that has happened in the last few years guides us towards achieving that number that we have set for ourselves. We've set up verticals which are giving us the growth. So despite the tractor business looking flattish for the year, we are positive that we will be around 20% growth for revenues this year for the company. And given a normal monsoon, we should be able to accelerate that growth in the next 2 years. And the work that we are doing in the global market in terms of the marketing in Europe, consolidating in Europe, and the entry in the US market that we have announced by FY26. With all these measures, we are hopeful that we will hit our vision of 3,000 crore by FY26.
And near term, you're saying for this year, you will still believe that you will grow by 20%?
Yes.
Okay.
Can you tell us the order book that you have on hand right now? And since you are lowering the guidance, what would the order book in the pipeline look like?
See, the order book, it is typically a passenger vehicle kind of segment. So there is no bookings as in the passenger vehicles. But the demand is looking favorable with the festive season. But the tractor is looking flattish. The power tiller segment is looking good. We expect the tractor should be a little more bullish in Q4 with subsidies and with government supports coming in, considering elections in many states and the central elections coming as well. So we expect that to play out favorable for the industry. So we are looking at a flattish industry and a flattish growth for us. But all the other verticals, we are growing at an aggressive pace.
Okay. Just to follow up to what my colleague was asking you, you said you maintain a 3,000 crore revenue guidance by FY26. This recent agreement that you've signed with SolidTrack, right, to develop electric power tillers, what is the we don't know the quantum of this order just yet. So if you can help us with some ballpark numbers, what is the potential revenue from this and when would it start to flow through in your revenue stream?
Yeah, so this is the second agreement that we have signed. We are already supplying drivetrains to a leading US company in electric tractors. This is the second agreement that we have signed for development of electric power tillers and other farm machinery. We expect this to take off in the next year. There is no revenue guidance on this at this point in time.
Okay, there's no revenue guidance. Got it. But in this electric space, you are moving forward. You've come out with a couple of announcements in the past as well. And a lot of your peers are also, sort of putting capex on board and trying to expand in this space. Electrification of tractors, what is the kind of opportunity size that you see over the next couple of years?
See, right now, the opportunity size looks small. The largest market being the US market, which this year should be selling around 500 to 600 electric tractors, which is very small compared to the total size. But we believe with increase of power density in the batteries and the cost coming down, there will be a flip for electric tractors. And this will grow at a faster pace to start with the advanced economies of the US and Europe and eventually in India as well.
Okay, all right. Antony, we have spoken about tillers, about tractors, and the smaller segment is weeders. If I'm not mistaken, you were doing some 4,000 units odd. Could you tell us what is the updated number for this year? How many weeders will you be selling?
We are looking at 6,000 numbers this year.
6,000. Okay. And the other big focal point, Antony, which I've asked you for many, many quarters actually is on that land and the value unlocking out there. You've got a new government in there, so approval should come through as well. Normally getting into an election, there's uncertainty with regard to what happens with land. But now since, things have stabilized with regard to the government formation there, what's the view on this Whitefield land? I think the size was around 25 acres approximately. Have you decided what you want to do with it?
Definitely, we have kept this land parcel free for future use. We are working on it. And at this point in time, we don't have an announcement to make on that.
But by end of this year, at least, will you be making it? Or maybe in, could you give us a timeline by when you all will decide? Because obviously, there's big value in this land. So your shareholders will definitely want to know what you'll want to do with it.
Nigel, as I've said before, the focus of the company is for growth. And this cash needs to be released at the appropriate point of time in terms of investing for growth. And we will be looking at doing that. And rest assured, we will let you know as soon as we decide on that.
Okay. Sure. I mean, we'll be waiting for that, announcement from your end. But I want to also understand, you lowered your guidance for the tractor segment. On the tiller segment, you said 15 to 20% growth is what you're looking at. Would you lower that as well?
No, I said that will continue.
Okay, so that will continue for FY24. Got it. And what would your capex plans be for, say, the next 1 to 2 years? What's the ballpark number that you're looking to invest? And would you want to, at any point in time, take on any debt? Will there be any strain on the balance sheet? Just trying to understand what the plans would be over the next 1 to 2 years.
Yeah, we are looking at roughly about 100 crores in terms of product development, setting up a global tech center. That's the capex we have already announced. Capacity build up in the next 2 years, I don't see anything happening. But in a 3 to 5 year scenario, we look at capex on capacity build up as well. Those plans are being drawn out, and once it is ready, we'll be announcing that as well.
What about, Antony, just out of curiosity, what is the receivables position? Since you're dealing a lot with agriculture and, its products as well, what's the receivables position? Has there been any change?
No change. We, like I've said before, we work on a pull-based system. It is a theory of constraints-based model we work on, so it's on consumption and our receivables are in control. It's around 45 days.
Got it.
Okay.
Okay, Antony, thanks so much for joining in. So for this year, give and take everything, you're still looking at a 20% revenue growth. By 2026, the 3,000 crores of revenues is what you're looking at. And margins will be maintained in this vicinity of around 13 to around 14% approximately.